In times of uncertainty, investors search for safety. AT&T is one of their safe havens. And over the last few months, we've seen a compression in Financial Pro's number of searches for AT&T and its rival Verizon on Trackstar, our proprietary stock search database. So we thought it was time for us to dive into the company. AT&T offers business and consumer telecommunication services. It boasts the nation's most reliable 5G network, reaching more than 281 million people and nearly 22,000 cities and towns in the US. Now, AT&T has struggled to get back to its 2019 revenue highs of $181 billion. In 2021, it did $168 billion in revenues, and its 12-month trailing revenues are $155.3 billion. The firm has $2.4 billion in total cash and $152 billion in total debt. Its current ratio of 0.62x could be better, but the firm pays out an attractive annual dividend of $1.11 per share, off a yield of 6%. And by PE gap ratio, AT&T is the cheapest telecom stock on the market, and it trades at an attractive 0.8x price to sales ratio, notably lower than the majority of its peers. AT&T has a gross profit margin of 54.3%, which is in line with its largest competitors. However, the stock has an EBITDA margin of 34%, and none of its competitors can match its EBIT margin of 21.2%. AT&T's net operating cash flow of $32.9 billion is lower than only Verizon at $36.5 billion, and AT&T's EBITDA growth of 6.7% tops its two largest competitors. In our opinion, this is a 9 out of 10 ranking stock. AT&T made some bad deals acquiring Time Warner and DirecTV, and its shareholders paid the price. However, the company is now focusing on its core strengths, wireless and broadband. It pays a handsome dividend and is relatively cheap compared to its competitors. We believe the company will turn things around, and it's a good investment at these levels.